Singapore, this tiny island nation, is smaller than New York City but is the wealthiest country in Asia and one of the richest in the world. Singapore has emerged as one of the world's most sophisticated and integrated financial centers built upon a foundation of strategic economic planning, robust regulatory frameworks, and exceptional openness to international trade and investment. Singapore's economy is characterized by its highly diversified structure, with manufacturing, wholesale trade, and finance and insurance activities collectively accounting for approximately half of the nation's total GDP. It has access to the Strait of Malacca, to Indian Ocean, to the South China Sea, which makes it a pivotal shipping hub. So it did this initially by transforming Singapore into a manufacturing base with a focus on labor-intensive industry at first to wipe out the high unemployment. 4,200 multinational companies have regional headquarters here. Low taxes are a big reason for that. Monetary Authority of Singapore (MAS), which serves as both the nation's central bank and integrated financial regulator responsible for promoting sustainable, non-inflationary economic growth through monetary policy, managing the exchange rate and official foreign reserve, and supervising all financial institutions operating within Singapore's borders.
Singapore is one of the world's most open economies, with a trade-to-GDP ratio over 300%. It has signed more than 25 free trade agreements, including the CPTPP and RCEP, and keeps tariffs and trade barriers very low. Major exports include electronics, pharmaceuticals, and financial services. This high level of trade openness contributes to a consistent current account surplus. Singapore earns more from exports than it spends on imports, and this surplus supports a stable and strong balance of payments. Foreign investments also boost the country's financial strength. Singapore doesn't use interest rates to manage its economy. Instead, the Monetary Authority of Singapore controls the exchange rate through a basket called the S-Dollar NEER. MAS intervenes in the foreign exchange market when needed to maintain price stability. These actions affect foreign reserves and are reported every 6 months. In 2023, Singapore received nearly $160 billion in FDI, ranking third globally. Investment mainly goes to sectors like finance, electronics, and green tech. Government-owned firms like Temasek and GIC also invest globally, showing Singapore as both a top destination and a global investor. Singapore has a strong capital market, with over 800 billion Singapore dollars in listed equities and a growing bond market. The country is a fintech hub with more than 1,000 firms and strong support from MAS through projects like Ubin and Guardian. Islamic finance is growing, and innovations like PayNow UPI improve cross-border transfers. Regionally, Singapore leads efforts in ASEAN and APEC to harmonize standards and promote financial inclusion. Globally, it works with the IMF, ADB, BIS, and FSB, contributing to financial regulation and capacity building. By doing so, Singapore remains well integrated and influential in international finance.
Now I'll briefly cover 3 key challenges facing Singapore's economy. First, fintech disruption. Singapore wants to be Asia's fintech hub, but faces risks like cybersecurity, DeFi instability, and compliance issues. Banks like Trust Bank and GXS have faced trust concerns. MAS is responding with stronger regulations. Second, rising global protectionism. US and China tariffs are disrupting trade. This threatens Singapore's logistics hub role. In response, Singapore is expanding trade ties through ASEAN and RCEP. Third, ESG pressures. New SGX rules require climate disclosures by 2025. This is tough for SMEs, but builds long-term credibility. The Green Plan 2030 supports sustainable development. Now, the impact. Fintech boosts efficiency but adds systemic risks. We need innovation, but with strong regulation to avoid shocks. Protectionism weakens Singapore's export-driven economy and deters investment. The solution is stronger regional trade and market diversification. ESG improves global credibility, but can burden SMEs. Long-term investment in the green economy will help maintain competitiveness.
This part of the presentation covers strategic recommendations to strengthen Singapore's role in international finance. Based on the challenges such as fintech disruption, rising protectionism, and ESG pressures, Singapore needs to take proactive steps to stay strong in the global financial system. First, in digital finance, Singapore should continue supporting innovation. Programs like the FinTech Regulatory Sandbox Plus allow companies to safely test new technologies like AI, blockchain, and digital banking. Working closely with regional partners, especially through ASEAN's FinTech network, can also improve cross-border digital services. Second, to address protectionism, Singapore should deepen its trade relationships by expanding agreements like the Regional Comprehensive Economic Partnership, or RCEP. This helps reduce its reliance on major economies and strengthens its role as a stable and trusted trade hub. Third, in green and sustainable finance, Singapore has the opportunity to lead by helping small and medium-sized businesses follow ESG standards. This can be done by offering training, funding support, and clear guidelines. Creating a regional carbon credit market and promoting ESG-focused investment products will also attract more green investors. Lastly, developing a skilled financial workforce is very important. Training in areas like digital finance and sustainability can help locals adapt to new demands. At the same time, attracting global talent will fill skill gaps and support future growth. To support these goals, some key strategies has been suggested. In green finance, Singapore should introduce a national ESG framework and provide grants or tax incentives for SMEs working towards sustainability. For capital markets, easier listing rules on the Singapore Exchange and support for digital assets like tokenized bonds and real estate will help attract more investors. These strategies will help Singapore stay competitive, innovative, and ready for the financial future. Next, we will look at the national corporations in international finance. We have DBS, OCBC and UOB. First off, DBS is both the biggest Singaporean bank in terms of assets and a major financial player in Southeast Asia, while OCBC Bank is the second largest financial services provider in Southeast Asia based on their assets. UOB on the meanwhile is a leading bank in Southeast Asia, providing a wide range of financial services. Singapore is a leading global financial hub, and two key institutions play major roles in this success: the Monetary Authority of Singapore, MAS, and the Singapore Exchange, SGX. MAS manages monetary policy using the exchange rate to maintain price stability while promoting financial innovation and sustainability. It actively collaborates with international bodies, such as China's central bank, to boost green finance and develop tools for rating carbon emissions. At the same time, SGX connects Asia to global markets by offering trading in equities, bonds, derivatives, and more. Over 40% of its listed companies are foreign, highlighting its global appeal. SGX also champions sustainable finance through ESG initiatives and climate-focused products, ensuring Singapore's position in future-ready finance. Singapore is shaping global finance through strong policies focused on sustainability and innovation. MAS launched the Green Finance Action Plan to grow green bonds and ESG investments, especially with China. It also supports fintech through Project Guardian, making Singapore a digital finance hub. SGX complements this with tools like MSCI Climate Action Index futures and sustainable bond accreditation. In 2024, the government invested $25.7 million to upskill the green finance workforce. DBS supports this with its green finance framework, issuing billions in sustainable financing and pledging 1 billion Singapore dollars to help vulnerable communities, reinforcing Singapore's leadership in ethical, future-ready finance.